Whether it's learning about earnings estimates, exploring the Zacks rank, or adding to your financial toolkit, get the education and resources to help you become a more successful investor here on Investing the Zacks Way. Well, this is the second installment in a series of segments on just how the Zacks rank works well with the four main investing styles. In this part, our editor-at-large, Steve Reitmeister, is joined by Alex Kolb. Alex is our growth and income stock analyst over at Zacks.com. Welcome, gentlemen.
Thank you.
Glad to have you both here. But Alex, we're going to start with you this time around because we always start with you.
Yeah, it gets boring.
Please tell us, if you would, how you would characterize growth and income from the other investing styles.
Sure. These are generally solid companies that are industry leaders. They're blue chip type companies that are poised to steadily grow over a longer period of time, over the long term, at least 1 year or so. Mm-hmm. They'll see higher earnings estimates from analysts. Their earnings are projected to grow over the next 3 to 5 years or so. And they'll generally have a market cap of at least $10 billion or so, again, kind of reflecting the fact that they're well-established industry leaders.
Okay.
They're not necessarily value-style type companies because we're not necessarily looking for low PEs here, and we're also not necessarily looking for growth that's based on momentum or any type of aggressive growth. As mentioned earlier, they're poised to kind of grow over time, but they will provide that steady growth over the longer period. And in addition to having the share price appreciation, they will reward shareholders with income in the form of a dividend.
All right. So, Steve, back to you now.
Okay.
How exactly does the Zacks rank, along with earnings estimates, improve investor success when it comes to these growth and income stocks that people want to pick?
When you think of these large cap stocks, because some people talk about growth and income or conservative investing or blue chip or buy and hold, it's all kind of synonymous together. So these companies like your Johnson & Johnsons and GEs and the ones that people hold on for a long period of time, what they're trying to find is consistent growth in the future. And the Zacks rank is one of the best measures of what the earnings picture looks like in the future. So it helps you find the best stocks to get into now in the growth and income class, but also knowing if the earnings estimate picture starts to weaken for these firms and knowing that they probably will underperform or start to lose share price in the light of that, then it's the best way to know which ones to sell. And so we're going to kind of cover both those angles, how to buy them and how to sell them.
All right, so Alex, then, if you would, fill us in a little bit on what investors should be looking for when selecting the best growth and income stocks.
Okay, a few things. As Steve just mentioned, Zacks ranks is a big one here, which I'll go into in a moment. Mm-hmm. We also look for a Zacks recommendation of a buy. And what that is basically our analysts recommending that these are good buys over the long term. And as mentioned earlier, these are again you're looking for steady type growers, so you want that Zacks recommendation buy, you want the long-term growth. And then getting back to the Zacks rank, we're looking here for a Zacks rank 1 or a Zacks rank 2. And as Steve mentioned, and as we know, the Zacks rank is a great indicator of what analysts are seeing as in terms of earnings estimates.
Right.
A Zacks rank 1 is a strong buy. A Zacks rank 2 is a buy. It's an indication that estimates are going to be on the rise, and this is what you want these companies to have. Why not just the Zacks rank 1, the strong buys? Well, again, another thing I mentioned earlier, we're looking for a larger cap, a market cap of at least $10 billion. Zacks rank 1 may not have as large of a pool of stocks that have that type of market cap. So we'll expand to the Zacks rank 2, which, by the way, outperformed the market by 19%. So but nothing wrong with that.
Right.
So the Zacks recommendation and the Zacks rank, those are two important things. Then we'll go into the return on equity. The ROE is what we look for. ROE of 10% or more is what we look for. What that is basically it's kind of an indication of whether a company is creating assets or kind of tearing through cash. It's a formula. One way to define it. It's basically income divided by common equity. What does that mean? One way to look at it is, let's say a company has an ROE of 10%. They are creating 10 cents of income for every $1 invested. So again, 10% or higher ROE. That's another attribute, parameter we look for. And we want projected growth, future growth over the next 3 to 5 years. We were looking for growth of at least 10% or higher. And this is, by the way, earnings per share growth that we're looking for 10% or higher.
Okay.
Over the next 3 to 5 years. And of course, this being growth and income, we want there to be a dividend, preferably 1% dividend yield of 1% or higher.
All right. You know, many folks think of growth and income as being synonymous with buy and hold investing.
Absolutely.
So, Steve, you've often talked about the dangers of buying stocks and holding for too long. Some advice, if you would, to offer these investors on knowing when to sell. I know we've talked about it before.
Yeah, what happens is people fall in love with these stocks, and they got a great management team, and the things they've done in the past should hopefully continue on to the future. And so what happens? They start to not pay attention to the stock so much, and really in this fast-changing world, you can't keep away from your stocks for that long. So one of the best things we can do is have people take a look at the earnings estimates, which is the best way to take the temperature of how well things are going on for the company. And then, clearly, if earnings estimates are going lower, we've shown time and time again how that company will underperform and the stock price falls. So instead of me talking about it theoretically, let me show an example of one of the bluest of blue chip stocks historically, which is General Electric. So this is our price and consensus chart, which is free on Zacks.com. The dark black line is the price movement over time. I believe it's like a 5-year snapshot. And then the colored lines are the changes in earnings estimates for each of the given years. So that first circle I have on the left is trying to show that in late 2005, we see where earnings estimates started to go lower for the first time. You'll see right in the middle of that circle, the earnings estimates started to go lower. If you look out over the next year, the stock market was up about 14% in that time frame, and yet you'll see that GE was about the same to slightly lower. Here again, earnings estimates being the predictor of where most stocks are going to go in the not too distant future. But then earnings kind of steadied out for a while as we continue to take a look to the right, and the stock price did start to appreciate. But here again, it comes up again. So in late 2007, we see a very marked decrease in earnings estimates. And a person could clearly have gotten out of this buy and hold position at about $38 per share. And this is what we keep saying, heed the warning, sell that stock. And as you can see here, it's not just one lower earnings estimate, it's 2 and 3 and 4, and here we are now at about $18, $19 per share. Okay, yes, the last 2 months every stock got beaten up. If we take a look at the period before that, when the market was only down 15%, and yet this stock was really cut down 60, 70%, it's because the earnings estimates were being decimated for the firm. And this is what customers have to pay attention to for their companies to clearly say which ones to hold and which ones to sell.
So let's talk a little bit then about free resources available from Zacks.com to help growth and income investors be more successful.
Okay, well, on the main page of our site, I provide commentary on the growth and income stocks. Individuals can just click, log on there, or not log on, just go to our site and click on the growth and income stock, the growth and income style of investing, and see a different stock every day that I write about.
Right.
We also have an education portion to the site that's terrific. It has a growth and income guide on there. It's a PDF file that you can click on, print it out, read it. There are also articles on the education portion of the site that describe growth and income. Individuals can also build a portfolio on our site and track their investments in the portfolio. If they see things like earnings estimates are going down, they can sell that stock and basically monitor their stocks through that free portfolio tracker.
And where there are free resources, there are also paid resources.
Right. So all the things he's talking about, a premium member to Zacks.com obviously get an advantage of using those materials, but some of the additional things they could do is the screening on the site. And so therefore, as Alex said, if you were trying to find the best growth and income stocks, you'd want to have a Zacks recommendation of buy, and you could screen for that, and then have a Zacks rank of 1 or 2, and then use some of the other criteria about the market cap and the dividend yield, and you can narrow down a list and find some great stocks to buy today. And then picking up on what he said about the portfolio tracker is that our free portfolio tracker does give you the change in earnings estimates over time. But here again, as we've talked about, there's 4 different factors of changes in earnings estimates and earnings surprises that are put into the Zacks rank, and Len Zacks put in the time to figure out which ones had the most value. So following the earnings estimates is good. Finding the Zacks rank is simpler and easier, and really every morning getting this email before the market opens and very quickly taking a look at a snapshot of your portfolio. Has the Zacks rank fallen for my stocks, or has the Zacks recommendation fallen for my stock? The answer is yes. Time to sell out and move on, like the GE example, and find a better growth and income stock. For those folks who don't want to spend all their time researching stocks, we do have some more hand-picked selections for them. In our Zacks Elite service, we have a growth and income portfolio that uses some of the same criteria that Alex is talking about, where our analysts, where our money managers pick out the stocks that we think would be attractive for a growth and income portfolio. So those are things available to folks.
And you mentioned GE in this report. Do you own or GE? either of you?
Would I own that with a chart like that?
I have to ask.
Okay.
I don't either. I do not.
I'll take that as a no.
No.
It's a no for me.
Thanks, both of you. That's how the Zacks rank and earnings estimates improve investor success when it comes to growth and income stock picking. Something more you can take away when trying to learn how to invest the Zacks way. With Steve and Alex, I'm Terry Ruffalo.